Hello, everybody. Welcome to the Sunday live stream. So today, just like the title and thumbnail suggests, we're going to take a look at who keeps selling. I don't think it's a surprise to most people. And also the question is, why are we just so range bound moving forward? So first of all, just to let you know, Jerry Hall is going to be joining us. He's running a little bit late, but he will get here. But today, as we take a look at the price action, I know somebody in the comment section, why did we pump today? And I'm looking at myself, I'm like, did we pump? Because I think in the last 24 hours, we went up 0.7%. Over 7 days, we went up 0.8%. Now, in 14 days, it's been about 10. But it feels like we've been pretty range bound moving forward, especially if we can take a look at this from like, May 13th, 104,000, then a little bit down, then a little bit up, and a little bit down, a little bit up, and so on and so forth. And I have to tell you, this type of chop action is really great for the traders out there, because as they start to go down and go up and so on and so forth. So if we take a look at this to me feels pretty range bound. Now, it's not as tight as say like traditional markets where you might move 0.1% and everybody starts to celebrate, but this is crypto. We're not here for a 5% pump on a day, on a 7-day. We're here for the big move. Unless I'm going crazy, that's pretty much how I see things. And then if we just kind of zoom out, we can see that these range bounds have been going on for quite some time, right? Going back to March 2024, here we were at 66,000. And then in August 1st, there we are at 65,000. And then we kind of have a little more chop. And then we have like a little bit of a peak in November, and we jumped all the way to 90, 100,000, went sideways for a bit, and we dropped down in here to the 80s. And now, of course, we're back up. And it's like, this looks like steps. So you have the first step here around 40, 2024, then you're just on this big long step. Then you go up again, another step, maybe a little bit, one step down, take 2 steps forward. So the question is, who is out there and why are they selling, moving, getting their Bitcoin? Now we're just gonna talk about Bitcoin for a bit, and we'll talk about alts in a second. And you can see here, there's a great website called Crypto Quant, and there's a link in the description, you can check it out. The first people that are dumping on you, if you want to call it that. Some people say, no one's dumping on me, Rob. I'm buying it up and enjoying the dips. Yes, that's one way to look at it. That's how I look at it. Other people are saying, why doesn't this go up every single day? For those people, here's why. Miners are not in it out of the general necessity. They're not here in it for charity. They're here to make money. And they're here to mine Bitcoin. And when they mine Bitcoin, to turn the lights or keep the lights on and the electricity humming, they got to sell that Bitcoin that they take in. Now, they don't sell this all the time. But if you can take a look here, this is Bitcoin miner inflow, meaning this is the Bitcoin that goes into their specific wallets that have been identified. Now, this is all on-chain data. And all on-chain data that's out there, you can be as precise as you possibly can, but there's a lot of people out there that will just cherry pick the data for whatever the narrative is. And I will tell you, like on this on-chain data, I'm pretty sure not all wallets have been accounted for, but Crypto Quant and a couple of different on-chain data analyst sites, they do the absolute best that they possibly can. But is anybody perfect out there? Probably not. But it does give us an insight about who is selling. And obviously, as far as Bitcoin miner inflow, that goes to their wallets. What's their outflow? Pretty much the same thing. I know it looks weird, right? You look at this, you're like, okay, that's the inflow. What's the outflow? That's the outflow. Inflow, outflow, inflow, outflow. And then if you want to take a little step further, this is miner net flow, meaning, how much comes in, how much comes out. Is it a net positive or a net negative? And you can see that. Let me just take a look at this one right here. May 18, 2025. Very monstrous candle here. As it goes pretty crazy. But then the next day, what happens? They got to get rid of that. They got to sell some stuff. Now, again, they're not selling everything, but that's constant price pressure. And that's where you get it from. So that goes to the miners. And then also, there's this thing called derivatives. And I don't play in that market. I just don't. I'm just not into that. But a lot of people like to, essentially, this is paper Bitcoin. They're saying, okay, well, this is the futures. We're going to short and long it. These are the derivatives. And we're just going to essentially gamble on what we think it's going to do. But when you're in the derivatives market, you're not buying Bitcoin for settlement. It's all in cash, which I always looked at this and I thought to myself, this just seems like gambling, but like, you know, traditional market gambling, but that's what it is. And if we take a look at this, this is the spot exchange volume versus the derivative exchange volume. What do you notice? The derivative exchange volume is like 4 to 5 times of what the spot exchange, that is the spot exchange volume, that little purple haze, whatever that is. That's the amount of volume that we do. Other individuals that have to settle on Bitcoin do. This is the derivative market. It's massive. But then your question is, well, Rob, doesn't make any sense, because if it's derivatives and this is just all paper Bitcoin, where the money that is flowing around, which I would much rather it be in spot, how does that affect the market? It doesn't make any sense. Here's what it comes down to. How many times have you seen a listing, a post, a video where people are talking about, okay, they're shorting massively on the futures, and then people go, I think that they call it smart money. I don't ever call it smart money. I just call it big money. Big money knows something, and we're the plebs, and since they're going to short it, I'm going to short it because I'm nervous. And then you sell, they're like, ha, got you, sucker. And then, of course, on the other market, they could just be waiting for that monstrous dip because they shorted like crazy. They hit the dip on the spot, or any other type of market, actually. They buy it and just wait for it to go up again. And that's essentially what they're doing. So I know people hate this comment, but it is manipulated. And if you don't think it's manipulated to the downside, but it's also manipulated to the upside. They do the exact same thing as they move forward and say, okay, we're going to go long. We're going to super long. And then we're going to try to buy this as low as we did, because we did the exact opposite thing 2 weeks ago. And they buy it and they sell it. And it's like it never stops. And again, where am I going here? When you go through this whole thing and just take a look at it, about this sideways chop, like right here, doesn't it make kind of sense? Like, oh, okay. I mean, there was some news that came out, but have there been any rate cuts? Have there been any? I mean, there's been macro news, but sometimes I just think that the macro news and the news that's going on about, you know, things like tariffs and wars and everything else that are going on in the background, but they just use that to start selling. So you've got miners and you've got the manipulators and the derivatives exchange, not all of them, but they're going to do that stuff. And then, of course, this is the interesting part, because a lot of these things, a lot of the big corporations and institutions are like, but Rob, what about all the people that are buying for, you know, the ETFs? Well, they're doing that OTC, over the counter. They're not doing it like what the plebs do, like we do, like we buy in just a regular exchange. And then, of course, when they buy in a regular exchange, you see stuff like this. This is the Bitcoin exchange reserve for all exchanges. Again, I don't think they can get every single wallet, but you can see that we're at the lowest point that we've been as far as like the exchange reserve for Bitcoin, going all the way back to, when is this? 2018. So, you know, when people are always talking about there's a supply shock, I always laugh because I'm like, yeah, I've been hearing about that since 2017. And here we are again. And it's just kind of because it doesn't really matter, because there's always going to be people who are going to sell. There's always going to be people that are going to be panic. And all these people are going to manipulate that and for their own gain. That's why, like, I never talk about trading, because there's traders that are good at it and they're like the top 5%. And there's other ones that suck at it, which is 95 to 98%. And those are the ones that get, you know, just don't make it, but they feed the machine. The only way that I think that I can get out of this is just dollar cost averaging, wait for blow off tops, then take profits a little bit along the way. I'm not here to like time everything perfectly. That's just not how it goes. So it is interesting though that we have this, I'm not going to say supply shock, but then if you take a look at this Bitcoin exchange net flow, Bitcoin exchange net flow, you would think like, okay, if the net flow is positive, that means that Bitcoin is going into or onto the exchange. But look at this. This is the part that confused me. And that's what I was kind of hoping Jerry would be here so he could put some insight into this. But what do you notice? the exchange net flow, which corroborates our story over here, is that it's been going off. People have been taking their Bitcoin off of the exchange, like we're always talking about, right? Cold storage or consolidation or whatever they're doing with it. And it's going off the exchanges. We can see it here. So we have these things and we're like, well, is this it? Is this how it goes? As far as like that, as far as the retail, yes. And I will tell you this though. There is one thing that does concern me, which is the holder's profit as far as like who's in the money and who's out of the money. This is from End of the Block. And because we are at this like sideways action, 110, 104, we're all doing the same thing. We're all buying. Either we're buying dollar cost averaging or we're buying dips. That's why most of us are in the money. We're in the money 97%. We're at about 1%. And the people that are out, it's very small. I don't think it's 0%. That can't be right. There has to be people out of money. Yeah, this can't be right. Because you can't be 0% out of the money. That's an error. And the reason why I say it is because did we not go to 111,000 and today we're at 108,000? Somebody bought that 111,000. So this is incorrect. Hold on. Let's take a look. Okay, that's better. So what's the, I got it here. Okay. At the money is 0.72. Out of the money, out of the money is 0.72%. Okay, so at least it's 1%. Maybe that's why it doesn't show it. And in the money is 94%. At the money is 5.65. So if you're wondering like who's selling, it's very simple. It is miners because they have to sell. It is the weaker hands that don't really know what's going on and going, hey, what's this derivatives market? Oh, someone knows something, I better sell. And then, of course, there's retail out there that have been holding for quite some time, and they're selling because they're in the money. And now here we are. So the question is, what are you going to do with that? So that I will leave up to you and to your expert opinion, because if you're here right now, you're not normal. You're abnormal. And I love you for it because you did something that most people don't do, which is bought during the bear market. Speaking of abnormal, hey, Jerry.
Hey, hello.
Hey, man, I'm sorry I had to start a little early, but we were just talking about, you look good today. You look good. You look thin. What are you doing?
I started, so I'm walking every morning. And the one thing that I added, and it was like, I knew this for many, many years. I've known this, but it kind of like went away, is I'm maxing out one exercise per morning.
Good idea.
And the reason I'm doing that is because I'm getting older, and the number one rule of aging is if you want to age well, keep as much muscle mass as you can, right? If you allow your muscle mass to deteriorate, you will deteriorate. And you know what? I'm getting so much good information from Digital Asset News. I'm going to be a wealthy crypto owner. I don't want to die out of shape and rich. I would much rather die fit and rich.
Yes, that is the whole goal. And like we said before, a healthy person has 1,000 wishes, and a sick person only has one. So that's a good way to enter the arena, Jerry. Very nice. So hey, so I had a question for you. I think you might have seen some of that stuff. We were talking about who's selling, because it is kind of annoying when you're like, why is we so range bound? And we went over this, we're at 103, 104, 108, 106, 107, something like that. And I said, that's a bummer. And just to recap, it feels like we're going in steps, step. I talked about the Bitcoin miners who have to dump on us by necessity because they got to keep the lights on. And then we talked about the flows as far as like with retail. And then we talked about derivative markets, how it's like 4 to 5 times what the spot market actually is.
Oh, absolutely. Yeah.
So they're just like you've told me before, they're just playing with paper Bitcoin. They don't have to settle in Bitcoin, correct?
Well, it depends on which market you're in. Like there are a lot of options markets that you are settling in the underlying asset. Yeah. And there are some that are built strictly on paper. And I'm not exactly sure how you differentiate which when you're entering these marketplaces. I use for Bitcoin and Ethereum, options, I use Ledger.
No kidding. Ledger.
Yeah. Now, it's not the wallet company. It's not the company Ledger that made the wallet. They're Ledger X, and they're a trading.
They're trading.
They're a trading platform.
Yeah. That's pretty good. So we've got that, but this is the thing that you can maybe shed some light on this one. This is the part that confused me, because I know retail's selling because they have to, right? They're massively in profit. But if we take a look here at like all exchanges, we're at the lowest point as far as reserves, going back to 2018.
Sure.
And then I took a look at this part. This is the all exchange net flows. This is all the exchanges that they know of as the net flow. And let me just zoom this in, these last about a year or so. I mean, people are taking, they're not adding too much to the exchange, because when they add exchange, then they sell it. Am I looking at this wrong?
No. The one element that I think we right, those are concerned about price action and price discovery mechanisms.
Yeah.
We need to understand that over the last 5 years, there has been a tremendous amount of sophistication in what we call the OTC markets, right? Kraken, Coinbase, Binance, all the big exchanges have an OTC desk, right?
Yeah.
And so there'll be many reasons why a seller would want to take their product to the OTC desk. You would think that every seller would want to get the maximum value for their element, but you got to remember, sellers have to find buyers.
Yeah.
You have to find a buyer. And so if those of you out there thinking that, well, you're incentivized as a seller to sell on the open market, therefore all price discovery mechanisms are in play, and the more Bitcoin that gets purchased at higher prices will obviously lift the price discovery for all asset in that, all Bitcoin. That's true, but that's not where the buyers are. So you have to understand, where are the buyers? The buyers are at the OTC desks,
right?
Trying to do what? Get the lowest price they can for and so at the end of the day, this whole thing boils down to who's buying, who's selling. I think you did a great job today explaining who the sellers are. They are the people that have been holding bags for many, many years, and they are the miners who create the Bitcoin through our mining procedure.
Yep.
Right. But who are the buyers?
Me and you, I think, and everybody in the comment section.
They're not you and me anymore. They
are
the
big buyers. You're saying the big buyers, right, Jerry?
They're inflows from ETFs. Do you think for 1 second BlackRock isn't going to an OTC desk? Of course they are. Do you think for 1 second that when a company, let's say Metaplanet, they decide to enter the quote unquote Bitcoin P&L strategy, right? The treasury asset strategy. Do you think they're going to Coinbase regular and Kraken regular and Binance regular? No. They're going to OTC desks. And the one thing that we have to look forward to is that at some point, sellers will be outpaced by buyers.
Right. At some point,
they will have to come to the retail market. This was an exercise I learned in the whole Ripple days, right? Trying to understand why the demand side wasn't outstripping the supply side, and trying to figure it out with the Ripple escrow and all these type of elements. And as long as there are markets and secondary markets, it's going to be hard to pinpoint this exactly, right? But we can extrapolate and speculate through certain vehicles. And so exchange flows are one. They kind of help understanding the ETF market. That'll kind of help. And understanding the demand that's coming, the new demand that's coming. Can you imagine that we're, at 2% of the world understands this and is into this? What happens when we get to just 10% of the world?
Yeah.
I mean, that's 4 times where we are right now. That's 400% of where we are right now. And that's only at 10% saturation for the market.
I know. It's a funny thing because like I was talking about this yesterday. Went and played some volleyball with some friends, went out to eat afterwards. And then I was talking with a couple of them about investments. For some reason, I got into this. And then I opened my big mouth about what do you guys think about Bitcoin? And they're like, that's not real. And then I'm like, you motherfucker. I was like, oh, well, listen, this is what, and then of course, like you go down that rabbit hole. And I think I did a poor job of explaining it because then I got into like, well, yeah, well, do you know what the Treasury does and the Federal Reserve? It's about as federal as Federal Express. And let me tell you something. And then we went into like all about how like the Cantillon effect or Cantillon effect, where there's money printing, which goes to the big players and they get the assets and it floats down to you plebs, and how you're always going to be sucking for life unless you get into assets, more specifically the hardest digital asset ever in Bitcoin. They're like, okay, well, who wants another round of beer? I was like, yeah, I didn't say that right. But I mean, that's the kind of thing that we have to get to the people, and it's got to figure out the best way to say it. Of course, I was drinking, so you have to excuse me.
You may remember this, but it wasn't that long ago when if you had a conversation around the internet, it wasn't uncommon to get responses like, yeah, but how useful are cat videos? Really? I mean, at the end of the day, Jerry, this internet thing and the cat videos, how valuable can it really be? That's telling true. You, those conversations took place. I can imagine 150 years ago, guys at the town stables going, seeing one car go down the street going, oh, that's so noisy, that'll never catch on. It's too noisy. It stinks.
It stinks. And my horse is always dependable. It never breaks down.
My horse never breaks down until it breaks down. And then you got to kill it.
Yeah. Well,
your horse breaks down. That's it.
That's it. I will say, like, not to go off on a tangent, but I remember when the internet came around and people were saying, who would buy anything on the internet? Do you know how many scams there are out there? Why would you put your debit or credit card out there for people just to take it? That's never going to catch on. I just go down to the store, get the stuffs I need, and then I'll come here. And Jeff Bezos was like, I got some books you might like. And then here we are today. But yeah, I definitely see it.
There was no debit card before e-commerce. Did you know the debit card was born in e-commerce? There was only credit cards.
I remember there was this video about McDonald's in the 90s, and they're the first ones to take debit. And everybody's like, who the hell is going to use that? I mean, seriously, I got cash everywhere and you want me to use this card? That's dumb. And of course, why would I use a debit card for a value meal that is $2.99? That's when value meals were $3. Ah, man, it's good to talk about the good old days because you're old. So Jerry, let's not get off too much in a tangent.
Okay.
I want to finish this up about, so we talked about who's selling and what's going on, but there's also another side to just Bitcoin selling. It's altcoin selling. This was a great post from Mike Dudas, crypto investor, co-founder of The Block at Links DAO. And he's talking about TIA or Celestia. And he says it. He says the thing out loud, which is this lead VC or the lead VCs have sold 242 million of Celestia into this chart in a little over 1 year since TGE or the token generation event. Absolutely insane. And that's where most of the funds go to. These new altcoins that have come out, Celestia is relatively new, 2024. Well, 2023, the end, and then January 2024. And they've just been taking the liquidity out and somebody's getting rich. But after that, then it'll probably do well. That's why, like, I know people don't think this is very popular, but I still think the Dino coins are going to do well because all you got to do is go to this website called tokenomics.ai. And it's free, links in the description. And you can take a look at, because the big thing is, well, how many of these different tokens are being released? Because I can tell you right now, I've been an early investor. And not all of the VCs get all of their tokens up front. They get a big boatload after a certain amount of time, and they keep getting it, and it's just massive pressure. So go here to Tokenomics, and you can just see like all the upcoming, like this one, 1 inch. It's got a day or so, and it looks like Circle Supply, and they've got an unlock coming up in 1 day. How much is it? Oh, it's like 32,000. That's not a big deal. IOTA, Move, IMX, Render's got I guess, an unlock coming. The question you have to ask yourself is, how big is it? And if you want to do something like to take a look at your token, your altcoin, I'm not talking about yours. I'm just saying whatever it is. Go to CoinGecko. Let's click on like Solana. Everybody gives Solana all this guff because of all the VCs. It's a VC coin and that they're dumping on us. Go here, scroll down to tokenomics. You can see the token allocation. Wow. Inflation is 33%. Well, okay. That's going to be clipped and all over Twitter, and rightfully so. But then you can take a look over here for like, how much is actually getting unlocked for like rounds. And it looks like the seed round is already, is that full? Which one is going? I think it's just inflation. Yeah, inflation's the only thing that's going up. The team, the founding round, the validator round, the strategic round, the community, they're all staying the same except for inflation. Well, it is what it is. And you can do that for any different token that you have that you're into. Jerry, what are your thoughts on that?
It's a real tricky minefield that we're navigating, right? Obviously, any angel investor, any early seed round investor, their job is to not only get their investment back, but to get their investment back plus whatever. It's no different than when you lend some incredible young person who doesn't have the resources, the ability to buy their first home, right? When you're doing that, there's an element of altruism there, right? You're giving somebody a chance that maybe a bank wouldn't, but you are expecting a return on that money. VC and do the same thing. I think they're a necessary part. I think what you're highlighting though is some information that investors need to have when they're making investments for long-term assets. So if you're going to hold Solana for a long period of time in your mind, you best understand its inflation schedule. You better understand when certain cohorts groups of investors are getting unlocks, right? Because their job is to capitalize and get the return on their investment. So I don't play a lot of those kind of games. I invest a little bit. If it's got an inflation rate, that means that I can stake it and get a yield on it, and that yield can compound. And if over time that project becomes utilitarian and gets used, then I've got a shot at making some money. But I have a 5-year time horizon for that kind of stuff. Most people in crypto, 5 years is an eternity. They're thinking, they're not thinking past the next liquidity cycle.
Yep. And when you just said that, you said, you better know about the emission schedule, the token unlocks, and any kind of partnerships. It goes back to what Stanley Druckenmiller would always say, invest first, do your research later. So right now, whatever you guys are invested into, now it's time to do your due diligence if you've gotten a little bit too heavy into it, and just kind of go from there.
100%. 100%. One of the really interesting elements is, and it was Charlie Munger, the Warren Buffett partner, right? He said this thing, he made this comment once, and it really stuck with me. He said, show me the incentives and I will predict the outcomes. Right. And so people just need to understand what incentivizes all these different participants in the thing, whatever the thing is, right? The traders. Well, the traders are incentivized by volatility. Oh, that's pretty simple, right? Understand that. Volatility is going to equal more traders coming to the thing. VCs are motivated, incentivized by return on investment. What are their time horizons? Right? Most VCs have a 1 to 5 year time horizon when they invest in a project, right? Try to understand what that is and who they are, because not every VC house has the same underwriting guidelines. And just do that for every cohort of the project. And if it takes you investing $5,000 or $100,000, or in ballers like your case, a couple mil to get some skin in the game, then so be it. But regardless of the volume of money, the process is the same. It's a rinse and repeat kind of thing. You can take that to any investment, whether it's real estate, stocks, or in the digital asset space.
Yeah, well said, especially real estate. And then as far as like to answer your question about what's the incentive, I'm just here for the tech, Jerry. I'm just here for yeah, exactly. All right, everybody. So well, someone in the comment section said, show us some other tokenomics. Okay.
Okay.
Let's go through this. I am curious if this is Solana. I'm curious about the Ethereum. I think that's all the same thing. Oh, they don't even have it. See, some of these on CoinGecko, you don't have the tokenomics, but I think that there's no unlocks for Ethereum. I think it's all just inflation now. How about XRP? I wonder if they have any kind of, nope, no tokenomics XRP. I think that should be released already. How about BNB? No tokenomics. Maybe it's all gone, or maybe it's all released. Tron?
Let's go to Tron.
Tron. No. Damn it, this one's sucking. Oh, let's just go to Card. Let's see. How about let's take Cardano. Okay, fine. Tokenomics. Here's a distribution. What is this? Wow, the public sale was 25 billion. That's almost 60%. Staking and treasury funding, 30%. Hey, Charles Hoskin is talking about taking 10% of that and putting it into Bitcoin. I support that.
I do too. Smart play.
Yeah. And then, of course, they're trying to be a layer 2 for Bitcoin. Oh, look at this. Now, this is how you want to see a supply schedule.
Steady, Scotty, steady ahead.
Steady ahead. And, of course, there's others out there. You guys can check that out. But just to finish up, and we'll get to a little Q&A, I just have a pop quiz for everybody here. You get this email, which this was me. Celsius distribution update. You click on the email of where it's from, and it looks kind of legit. And it says, "Dear valued client, straight out of the case management at Celsius Network, Chapter 11 bankruptcy, blah, blah, blah. All the coming in. Act now to secure your entitlement. Prompt completion of the required steps ensures timely access to your funds. Access the distribution portal." What do you do in this situation?
Run!
Run like crazy.
Run!
I'm just curious what people have. Jay, what do you do with these emails personally? Do you just delete them, or do you
as fast as possible?
Over it? Yeah. Okay. Well, the Rook says to delete it, and he is absolutely correct. If you're ever worried or wondering about these things, the basic thing is this, because some of these actually are legit, but they'll never take you to the right. If there's a clickable link, you never go to that. And there's this term I coined, which is go to the source every single time. There's a link in the description. It goes to this great website. It's not the greatest. It's the greatest of all time. I mean, people just say it's the greatest. That's what it says. It's digital asset news, and it's free. It's 100% free. And the very first module, I tell you, avoid all scams easily, go to the source. And this was from a video we did about a week ago or so when they reached out for me from crypto.com, and it looked legit. And I went to crypto.com because the domain was crypto.com. And I just went to the source, and they're like, no, it's not us. I was like, damn it. I'm not supposed to do everything. So you always go to the source, make it easy for you. You can find these videos in the description, or you can go to the website itself. But I think everybody knows what to do in that situation. That's it for today. So everybody, thanks so much for stopping by. Now we'll get to a little Q&A. You can ask Jerry any question you want to, and I'll just start rattling them off the questions, and we go from there. How about this one? Bonk is on the move. Jerry, you own any Bonk?
No, I do not. I missed the Bonk train.
It's okay. So I own some. I got not a big, huge fat bag, but I got a little bit. So I'm curious about that. Holy smokes, 20%. Although, I think I'm pricing
the one underneath it. The one underneath it was Let's Bonk, and it went up 93%. Exactly.
That's how you know it's going to go great. Look at that, 24 hours, 7 days. What are you talking about here? 53%, 87, 30 days, 43. Only down 3.4%. I think what's happening is there's rumors, correct me in the comment section, of a Bonk ETF. Is that correct? Yeah, as Jerry palms his head. Yeah. Maybe that's not it. Friggin says bonk no, Modang yes. Seth says memes are outperforming utility coins since April lows. I think if you look at a handful of memes, yes. But if you look at the entire meme ecosystem, I still wouldn't do it. Ooh, this is a good one. Hey, Jerry, could you speak briefly about the current state of hypercycle? Are goals being met? Development going steady? Great question.
Sure. So interesting in that I will tell you, hypercycle, this is a really nice piece of data. Hypercycle is not beholden to a group of VCs.
Oh, there you go.
So all of the hypercycle revenue was generated through the token generation event, token sales, and licensing, selling licenses, right? So that's really cool. The state of affairs at hypercycle, we are just releasing what we call our manager, right? Our node manager, and features like manager mode, in which people who hold hypercycle computation nodes can put those enact them on compute. And we've partnered with this incredible company out of Uruguay, and it's called HyperPG. It's a joint venture between Hypercycle and Penguin Digital. It's basically a really monster data center powered by hydroelectric electricity. It's really incredible. So where we're at is we've got the global YMCA initiative called HyperY, utilizing our hypercycle computational nodes to do all kinds of incredible things for any one of the 1,200 YMCA offices. And we've got a whole registry of AI modules ready to deploy. And we have the node manager so that node owners and operators can plug into this, well, like a switchboard, the ability to mix and match and do this and that. It's getting really exciting at Hypercycle. And if you're interested, just go to hypercycle.ai or go to Hypercycle on YouTube. We're always putting out explainer videos or fireside chats or this or that to keep the community informed. I hope that helps. Now, can I answer this one too? Hypercycle price action. We don't give two poops what the price of the token is valued at, because guess what? The token by itself sitting on an exchange has no value to us. The Hypercycle token is your access to get and create a Hypercycle node. The Hypercycle node is the value proposition of Hypercycle, not the price of the coin. So if you're looking to get into operating an AI node, then the lower the price of the token, the better for you, because you need 1,024 tokens to marry to a license to become a node in the first place. So if you're measuring Hypercycle's value by the price of the token, then you're not understanding Hypercycle. And that's fine. Not everybody needs to understand it. But please, the value is in the node, not the individual token.
Well said. Uncle Ricky says, get a weighted vest for your walks. Ricky's like the third or fourth person that has said that. And Ricky, you are right. Ricky. I got to get one of those just for rocking.
I'm telling you, the weighted, I carry a weighted vest already. It's this 60 pounds of cervaceous fat trying to work out my body. But
Jerry, I've seen you in real life. You're not that big. I think you think you're big, but you're not that big. You're just there. You're almost there, man.
I'm telling you, my back hurts when I walk long distances from the gut. So when the gut goes away, Uncle Ricky, we will get a weighted vest.
Yeah. Well, my back hurts because all these fat bags I keep carrying around. And that's just how it is. Let's see. Dubsky, there's one. Oh, here's a good one. Rob, we want to know Jerry's exit strategy on some of his positions. Jerry, do you own any altcoins?
I do.
Pick one and talk about like how you're going to get rid of it, even though you're here for the tech, which we know you are. But at some point,
here's a classic example. So Cosmos Hub, right? Atom. Wonderful product, an incredible ecosystem. I had bought low, compounded interest. I am now unbonding that token. I will let it continue to, yeah, I'll continue to own it, but I'm going to unbond it. And I'm getting prices, right? I am going to sell at this. I'm going to sell this tranche at this price, this tranche at this price, and get down to a manageable level, where the manageable level is the minimum that I'm going to continue to own and stake.
Yeah.
And so that's what I'm doing. And I've got several projects that are like that, because I had, early a very layer one heavy strategy. I'm going to invest in all these layer ones. I'm going to compound the interest. And one of them is going to produce a killer app. That was my thinking.
Yeah. Cosmos, I know people write it off, and they say, it's not that great. But behind the scenes, it is doing something. I remember this was 2 or 3 days ago, we were talking about Tom Lee from Fundstrat. And he is being responsible for putting together the MicroStrategy, but play for Bitcoin, but for Ethereum, and putting on the balance sheet of the company. And then Tom's just talking about it. And he's, we asked some people to come out, and the people that we like to work with. And they talked to Kraken, they talked to Consensus. And I guess these guys are the ones that are like helping out and putting funds into it. And one of them was Cosmos. I was like, that's interesting. It's interesting. So, but they were talking about like, these are the guys that we trust. These are the guys we want to do things. And I just thought it was a different way to go. We'll see. Hey, here's one, Joe.
I want to get down to only holding about 3 or 4 coins, to be perfectly honest with you.
Yeah. That's the goal. My portfolio is mostly Bitcoin as far as like the valuation of it, but I got a bunch of worthless tokens. And of course, there's some alts that have done pretty well. So I'm doing okay. But that leads to this one of the tokens that I carry, Solana. You got any price predictions for this one?
For Solana, you know what? I don't own very much of it. And the reason I'm not a big fan of Solana is I'm not a big fan of it's okay to break. When we're talking about financial instruments, that it's just not okay to break. It's okay to break in your test net, right? But when you make a public release of your product, it should not break. It just shouldn't break. And therefore, I'm not a big fan. So I own what I own. It'll compound itself within itself. But I don't dollar cost average into Solana, and I'm not that big a fan.
I'll play devil's advocate because I can hear people screaming right now because they own big fat bags of Solana, which I own some myself. Some people would say, but Jerry, it's still in testnet, even though it's been like 4 or 5 years. It's still in testnet. It's not coming out. And so like, that's the thing. But you're like, And then as far as like breaking, think of it this way. Does anybody bank at Wells Fargo? Talk about a broken system. If you try to like move funds, it's not broke per se, but it's like essentially broke to actually move things around. And then the last part, people would say, well, first they also say like VC coins. And I have always said this, like, I think the VCs got out before the 2022 crash and they dumped on all of us. So I don't think that's the big issue. However, if you don't like Solana, like what Jerry said, which is a good points, you want something that stays up. I was listening to, it was Coinigy. It was a podcast, and they had the foundation president from Arbitrum, and they talked about why Arbitrum was chosen for Robinhood. And he said something that stuck with me. And he said, in the 80s and 90s, nobody ever went broke, or nobody ever got fired for choosing to integrate Microsoft into their programs. He goes, because you just stay with the safer option. When we talked to Robinhood and we brought them on board, or they brought us on board, however you want to say it, they said, we've done our due diligence and we just want to be safe. And that's why they put on Arbitrum. And people would say, but it's not the fastest, it's not the best, it's not the da-da-da. That is not the point. And there's a lot of people out there that'll say, and Chamath Palihapitiya is one of them, says like, look, you're going to have winners, the big winners who are going to absorb everything. Take a look at Google for everything for search. Take a look for Amazon and everything for shipping. Those are the safest plays you can get. And the same thing's going to happen with the digital asset space as they integrate in traditional finance. The winner, it's going to be very few, and they're going to absorb a lot of things. And that, I personally think that with Arbitrum choosing a layer 2 solution is like, yeah, okay, Ethereum may not be the fastest. We know it's, this got problems, layer one, but, Arbitrum, we can do a lot of things with it. And again, it just stuck with me. Nobody ever got fired integrating Microsoft into the systems. And I think nobody ever went fired as far as in banks integrating Swift, even though it's been around since the 60s, and it sucks. It is what it is. Okay. Here's a good one. Hey, Jerry, what happened to Not Your Keys, Not Your Coin? Rob seems to have abandoned it. Well, first of all, I haven't abandoned it. I just don't like all these wrench attacks and the problems that are having with people losing their funds. And I'm not going to be that guy coming on to my show and crying like a little girl and saying, oh, I lost all my Bitcoin because I put it on a ledger, or I put it on a TANGEM, and all my 3 TANGEMs are gone, or my ledger's gone, and my backup phrase was in a fire and I lost everything. Help me. I refuse to be that guy. So what I did, and this is actually one of the videos, the 4th video I put on my website, portfolio storage diversification. I have multiple TANGEMs. I have multiple ledgers. And because of that, which I think is just fine, I also want to have somebody institution grade custody, which I use with iTRUST. So I shipped over my Bitcoin, and it's under custody, which is the same custody that MicroStrategy, Michael Saylor, and BlackRock use, which is Coinbase Prime. And I can't get that stuff out. I can't. Bitcoin's not coming out. So I didn't abandon it. I just want to diversify. And that's where I'm at. Jerry, what do you think? Bad idea? Reasonable?
Every single thing is relative to perspective, right? And so at some point, you have to ask yourself, are my assets worthy of insurance? Right. And if they do, if they get to a point where they're worthy of insurance, do you think for 1 second an insurance company is going to insure your ledger? No. Will they insure your Coinbase custody? Yes. Yeah. And that's what you have. You at some point, it's about protection, right? And although I do agree, not your keys, not your crypto, from the perspective of confiscation risk, sovereign laws being passed that could hinder or hurt you, there is also the other side of that coin, and that is if you have so much, then it is actually the higher risk of having a dude take it from you at gunpoint, or your wife's got a gun to her head, or whatever, those kind of things, versus having it insured in a insurable custody situation. And I think that everything is relative to understanding you and your particular situation. So there is no one size fits all description of whatever. I think we're getting sophisticated now in digital assets, and it was very important to understand that if you hold your keys, you have a certain amount of control and sovereignty. And I think that's super important, but you also have to understand your value and what your risks are to your capital.
Yeah, and I think it just comes down to what you're willing to tolerate. I know, and we talked about this in the video, which was Plan B. Plan B came out and said, look, I took all my Bitcoin and put it in an ETF. I guess I'm not your key, not your crypto guy anymore. Sorry, but it works out for him. And I think for some people, they don't want to deal with it. They just want to say, okay, well, if Bitcoin's going to where we think it's going to go, at least let me keep a percentage of it if I get wrench attacked, or if I have a fire, or if something happens in like the storage, my ledger that I store in my blah, 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 gets confiscated by the powers that be in the next 4 years or whatever. Who knows? So I'm just saying, I think it's what everybody else has to go for. It's not about not your killing crypto. For me, it's just, I just want to make sure I have something and just diversify. Alrighty. I realized that we didn't actually give a price prediction for Solana. Jerry, you want to give a price prediction for the hell of it?
I think Solana is going to grow. And the reason it's going to grow, not necessarily because it's so incredible from a tech standpoint, it's because it has an incredible community behind it, right? Communities make or break it. If the community, you got to remember, a community is like having a marketing team. The community is like having this huge group of beta testers. The community, I mean, the community is everything. And so as the community continues to fight for Solana, somebody is going to talk to somebody. Maybe somebody's brother is an executive at Microsoft. And the next thing you know, they're having dinner. And the next thing you know, they start tinkering around and an engineer builds something and an executive likes it. It gets funding. A year later, now all of a sudden, look, Microsoft's got a Solana product in its house of stuff. That came from a dinner of a Solana enthusiast having dinner with his cousin who happens to be an executive or an engineer at, you know what I mean?
I know what you mean.
Happen all the time. And they come from that rabid community.
You know what? It's not about what you know, it's who you know. And
Sometimes.
every business I've ever done, that's really what it comes down to. How many people wrote off Ethereum this cycle? Like, it's going to go to zero, or it's just going to go, it's going to be at 2,500, 2,000. And then Robinhood rolls out. And it's like, you know, we picked that one. You don't think that other companies are standing up and going, why'd you pick that one? What's this layer 2 solution? How can that help me? I guarantee you more people are looking at it. But to get to, I can give you, I mean, here's my price prediction. Solana right now is at 152. It will be somewhere between $2 and $10,000 by the end of the cycle. However, that's just me. And so far, I'm undefeated in price predictions. But if we go to Ben's site and we take a look at, and I know this isn't a price prediction, but we take a look at risk levels. I always like to do this because it's always fun. Let's take Solana, which the risk level right now is which is kind of high, 0.59, 0.6, just saying. So if we take a look at Solana and we say, okay, what is like, let's take where I would consider taking profits is 0.85. That's at $441. That's not bad. Actually, I should probably scale that back to like 0.8. But if we go all the way to the peak tippy top of where it could go, again, this is just ranges $892, which I think is in line with people who say it's $1,000. But don't quote me. That's just something on a website. It's a good website, and if you want to sign up, there's a link in the description. Anyhow, boy, I got to tattoo that somewhere. All right, what else is that? Joku says Solana is not the fastest. ICP and SUI is. There is a great website called ChainSpect. Jerry, have we talked about this one yet?
I think you probably brought it up. I don't necessarily gauge the value of something from transactions per second. But
well, no, boy, and you're right not to, because like for SUI or SUI, it's not so much the TPS, but for just like Cardano, every transaction can have 100, 1,000, whatever within that. So like for here, if you want to take a look at the fastest, are we looking at theoretical TPS? Or are we taking a look at actual real-time TPS and the highest? If that's the case, let me tell you which one so far is bleeding. Kita, which is not doing anything right now. Transaction volume, 0 transactions. Well, okay. Red Belly has 23 transactions. What is this volume? Doesn't say the volume. Okay. ICP has done 988 transactions per second. Aptos 55. So like, and of course the theoretical is just theoretical. But Solana, well, there's SUI at 25. The hell did Solana go?
It's up.
Well, it does say Solana has the highest real-time TPS across all blockchains. Highest real-time TPS, even though it's not listed here. It's weird. Max. Oh, this is what it's done, 11,000. Well, anyhow. Well, good for that. But again, is it really all about TPS? If it was, then Solana would be doing pretty good. But like we pointed out, there's always a little stipulations between that. Let's see. And Sol is not the fastest horse. Although I will say, like, that website, again, ChainSpect, if you take a look, where was that? Sweet TPS. Damn it, it's not here. Ah, wish I would have had that. Oh well. Ah, what else we got? Sad that it doesn't feature cash on the list. It's a good question too. What else did we miss here? New Type says, that's what we call cope, Jerry, respectfully. I'm going to guess that New Type's got a couple of Solana. Let's see.
And you know what? Here's the thing.
All right.
I have never in the history of my life, 60 years on this planet, ever 100% picked all the winners.
What?
Never. And so and here's what I have to accept, right? It may be one of the big regrets in my life that I did have opportunities to buy Solana at $15 and $6 and $10, and I passed on it for other things that turned out to be absolute duds. And I'm just going to have to accept that, right? I don't need to be right at the end of the day. I just need to be more wealthy tomorrow than I am today. That's at the end of the day, that's what I'm shooting for.
That's not a bad thing to shoot for. Not easy though, especially with the volatility.
No, it's not easy.
No, it is not. All right. Where Dogs Thrive says always the best price predictions. The most accurate, I'll tell you that. And I think Solana is poop emoji.
You know what can I add one point? This just kind of really occurred to me, and it's something that I think you and I both do, but we don't talk a lot about it. And that is all of these coins that have inflation schedules to them. In other words, there's a treasury that feeds its proof of stake protocol for rewards, right? That's the inflation rate of the token. The token comes into being. Okay. If your coin, whatever alt it is, its valuation exceeds its inflation rate, you're doing fine. So I would ask New Type and his conviction towards Solana, is Solana beating its inflation rate over the course of its life? How would you know? I don't know. Maybe Ben has some cool discovery tool that lets us know that. But that's what I would do. And you could probably ask ChatGPT that. Matter of fact, you know what, New Type? I'm going to go ask ChatGPT, and my opinion of you and your conviction to Solana is going to be heavily weighted on that answer.
You know, well, are we talking about the price appreciation of Solana versus the inflation rate?
Yeah.
Yeah. Well, I mean, I remember this cycle wasn't
share, right? The expected value per share, if you're talking about a stock, is this literally the same equation.
Well, that's the same thing with tokenization, right? You take a look at the circulating supply, max supply. Really, we want to take a look at the token supply, and then just extrapolate that and see, well, that's the price, that's the market value, right? So, well, I will say, like, people will say, well, you know, it depends on when you got it, because like a couple, 6 months ago, I think we topped out around 250, maybe sooner, 240, 250. But then people will always say, but it was $9 during this cycle between 2022 to today. So you take, and again, it's all like, when did I get it? I got a little bit at $9 or $8, but it wasn't that much. And then I think I got a good amount at around 60, 70. And then I got probably more around $100, but it is what it was because I've been dollar cost averaging. It's just price points. Really, I think it comes down to this. Are you happy with your bags? Are your bags doing something for you? Do you have the freedom that you want to? Then you're a winner. You're a wiener. That's it. Crypto Al says nobody went broke taking profits.
He's so correct.
Yeah. Seth says Jerry's making a good point. People need to understand this concept, and he's right. No ADA for me. Hey, someone in the chat said, you know what ADA needs is a good marketing team. Isn't that? Well, that's what Charles does. Essentially, he's like the main marketer. The
quintessential marketer for Cardano. I'd like to see it transition to others. I know that Crypto Crow's trying to do he's out there banging that drum. I, in my own little way, I'm building a product for that ecosystem that I'm really excited about. Maybe one of these days I'll share it here with y'all. Yeah,
I think so. Let's see. And then you know who's a way better marketer than Charles Hoskinson? Justin Sun. Justin Sun. That guy's the king of marketing. Let's see. Lax guy says Charles should join the Soul Army.
Wait, I think he did in some way. Isn't Solano part of that midnight airdrop?
Yeah.
Yeah.
Yeah. It's Bitcoin, Solana, BNB. I forgot the other ones. Let me see. If you guys don't know what we're talking about, there's an airdrop for everybody coming up. And all you got to do is just hold 100. All you got to do is hold let's see. Yeah, $100 worth of Cardano in your Cardano wallet, or $100 worth of Bitcoin in your Bitcoin wallet, or either Ethereum, Solana, XRP, BNB, Avalanche,
and BAT.
And we did a video on that. Just search for Digital Asset News Midnight, and it'll come up. I had Big Pay on. He explained.
I like Pay.
Yeah, everybody likes Pay.
I'm trying to get him to follow me on X, and we're in a private chat, and I said, hey, Pay, you know, I mean, I'm doing all this stuff. I'd really like to get a follow from you. And he goes, oh man, you know, I'm keeping my follower count real low. And I said, okay, dude, game on. I am now got to earn that follow.
Peyton lives down the
suggestions. If you have any suggestions for how to get Peyton to follow me on X, I am taking those suggestions. I want to earn that follow more than anything today.
Peyton lives down the street from me in Puerto Rico. This shouldn't be tough. All right. I don't even know if he's there though. He's always traveling. Let's see. I think that's it. We're coming up on an hour. This has been very fun. We're coming up on an hour. People got stuff to do. And that's it. Jerry, thanks again for coming on a Sunday. Appreciate you.
I love this Sunday show. This is a lot of fun with y'all.
It's always fun, especially the people in the comments. That's what makes it great, because the people in the comments, I think I have the best subscribers. They are smart, they are with it, and they are opinionated, and you can't beat that. Everybody, thanks so much for stopping by. Like today's video, thumbs up, subscribe. We and Jerry will see you next Sunday, but I'll see you tomorrow. Thanks so much, everybody. Adios.